Got it.
So Jason, what are we going to talk about today?
Hey man. So it's funny. I thought about today's, and I really think it's because of September. I thought I would talk about the word incompetence. I kid you not. I'm kind of looking at next year's planning, looking at what people are doing. It's an important part. I know Keller Williams hits on it big in residential, but in commercial we've got bigger fish to fry, and we've had to spend a little bit more time what our goals are going to be and how we're going to get them specifically. And I thought, because of what I've learned over the last several years, I'd share that information today. And the word incompetence came to mind because we're only good up until the level in which we're incompetent, right? So whatever that means from you, it means $100,000 in GCI, or it means $1 million. Beyond that, we need help. And I find myself being this time of year kind of frustrated with the business because I've looked back and say, how far am I off my goals? Even if I'm exceeding them, I get kind of fired up for the next year, but I also have a lot I can work on. So I thought I would kind of hit over how I go about my planning for the next year, where I think the business is coming from, and then talk a little bit about the data and knowing your area and what's important about if you're going to be the voice of commercial real estate to your clientele, then you're going to have to know the data. You're going to have to know what asset classes are selling, how many in sales volume, and then where and what asset classes. So where you get that data and what's a good place to start. So I thought I would just start with that.
Yeah, I mean, it's a good thing, Jason, because quite honestly, I was looking for some kind of information on that. I have access to CoStar, and I even spoke to them on Friday. I said, look, I'm trying to really give data, correct, good data to my farm or to my database. How do I extract that data in a way that is very concise and very informative, not just giving a long 15 pages of data that they can't make sense out of it, and really trying to get that concise information is the key. And what is the key performance, the KPIs that we need to actually look at or provide to them? So if you can maybe share with us what KPIs are important for the investors or owners.
So basically, as we talk about, kind of this theme of incompetence is how do I get to being a better value? How do I make more money and hit more commission dollars next year? And so in looking at some of the data that's important is specific to where you're doing your business. So one of the things that I did is I've been doing this year, I did it over a little bit over the pandemic, is I went downtown Long Beach and I started walking city blocks. And I looked at each of the blocks where I saw development opportunities, where I saw land. And I'm still mapping it out because I haven't finished it, because Long Beach has got such a grotesque size of downtown. You got North Long Beach, which still tapers on some of the downtown plan and so forth. So I'm not anywhere near finished, but I'm going block by block. And then I'm understanding where my opportunities are for either trades, resale, or development in those areas. And in particular, even the political districts, and breaking it up that way. So when I go to my clientele and I say, hey, Mr. Investor, I know that you normally purchase these types of buildings. In fact, I know that you purchased one down the street from the opportunity that I'm about to talk to you about. And I think this is why it's important, because this kind of activity is going on. And they say, well, how's the market? Well, I can't just say it sucks. I've got to come to them and say, listen, in this particular area where you purchased, sales have fallen, 30%, prices are up, 10%, and the average cap rate on what you're buying is kind of in between these numbers. And we're seeing an upward pressure on cap rates and a downward pressure on pricing in this particular area, in this asset class, and multifamily. Now in office, it's this. In industrial, it's this, right? So that we know the numbers in our particular area. And I think that is really important, because you sound like you know what you're talking about, but at the same time, you know what you're talking about, so that you can make a decision, or you can present information to them based upon where you're at. And I think if you just grow that area, so I started with Long Beach, right? That's where we're at. And then eventually I'll migrate into a little bit of Torrance. I'll migrate a little bit outside the area and get to know it just as well. And, it takes some time, but I can guarantee you there's nobody else walking around downtown right now in my business looking at it from, an alleyway. Yeah, it's funny what you run into down there. So, in fact, I got one off of a deal we closed last year, and I just noticed this large apartment building in the alleyway, and I've been calling on them for 6 months, and I finally got an appointment to present, right? Because I noticed that it had some deferred maintenance, and I hadn't spent any money there, but I wouldn't have noticed it had I not been walking around. And that might be a little bit too slow for most people, but it's indicative of what you needed to be, I think, in my mind, to get to more gross commission dollars. Do something that you haven't done, become an expert in that particular area. So that's one thing I think is really important for everyone to do. It doesn't have to be a large area either. It just depends on where you do your business. And then two, I think the sales data, CoStar has got its limitations. So I've been using my title rep specifically to nail down, this is the asset class I want to know about. This is what I want to know in sales on a quarterly basis for these areas. And I get that data. And sometimes the data is kind of messed up, but usually I'm getting them down to where I'm getting those once a quarter, and I'm having those updates, and I know how much of what is sold in certain areas. So I get an idea, of looking there, because there's not a real great place to get that data. I mean, Reonomy's got some. It's a more algorithm based and more, intelligence based, or AI in there. But I think that's really important, because then when you're talking to someone, what that sales volume is in that area, what asset classes have sold, and what the trend is, because these trends in our business tell us where we're headed, right?
Right.
And that way it allows us to go after the asset classes that meet that trend need, right? Because right now, what I'm seeing, for example, is I'm seeing like I said, those cap rates are being pushed up in the multifamily here in Long Beach, but not to where I think they should be, just to where they're going up a little bit above that 3.5% to 4%, but not all of them, right? But in general, with the last report that I saw a push, a little bit more push. People are unwilling to pay that kind of money, especially when the credit markets are so tight right now. And when you start negatively amortizing your return on something that you paid 3.5 cap for a 5.5, 6% loan on an interest-only debt for 2 years or something like that, right? So I think that's really important. But I think the title guys, the right title reps, have that information.
Okay, how would you define the right title rep? I mean, do they have to be specifically in a commercial, or do they?
Well, they got to know.
I had the exact same question.
So they have to be doing a lot of commercial transactions, so they know what you're talking about. Mm-hmm. So whether I use Kevin Kelly at Orange Coast Title because he has been in the business a long time and knows exactly what I want. Ryan Bailey with Fidelity, he's another guy. Doug Thompson, he does commercials. He does a lot of commercial stuff. And I mean, you got guys who know what they're doing, so they can give you that data.
Mm-hmm. Okay.
But they have to be doing a lot of commercial. The guys over at like Tycor and stuff, there's a couple guys that do, and you can get reports from a couple of them and see who's doing the best job.
Okay, when you're looking at data, what really are you looking for? Is it how valid the data is, or how detailed it is, or what is it that you're looking for?
Well, I don't need. I think I don't need that much detail. I just need to know what asset class, how much, right? How much it's sold for, So I get an idea of where those industries are headed in those particular areas.
Mhm.
And in Southern California, it changes, right? I mean, Long Beach to Orange County to LA City, I mean, those all have different numbers.
Mhm.
And it's important that you know the difference, because the submarkets out of the pandemic really started to see a lot of volume of sales in the multifamily, right? Because people were moving out of the city and scared to breathe on each other.
Mhm.
Now we're seeing that that's not necessarily changing, but there's not this flight out of the cities as much as there was.
I see.
People are coming back to invest their dollars in there. And that's what we're seeing in sales volume. And then you can look at historical data too. You can say, you know, where in your area in the last couple of years, this is record years in multifamily or record years in industrial or the worst years ever. I mean, if you were in New York during the pandemic, what's your data going to look like? It's going to look like shit, right? And no one's selling anything out there.
That's right.
No one's trading. No one's doing anything. So it's really important to get an idea of where people want to put their money. And then you can go with the triple net sales too. You know, strip malls and single tenant net leases that are being done. You know, that lease information is important. Although I don't know where to get good lease information. That's a tough one.
Yeah, lease information, I believe Comstock has the, I guess, some information that could be relevant. But
Okay.
yeah, so that's one of them, but it's very difficult to maneuver or navigate that site. So
Yeah.
it's quite really difficult, but that has a lot of information as far as the rent and you know what the situation it is. There's so
Hold on
much
one
distraction
second.
going on here. Kim, I don't know
Hold on.
who's.
Hey, someone needs to mute their there we go. Thank you. So those are two things that are really important for the new year. I mean, planning for the new year. Jordan, can you let me share a screen?
You should be able to now.
Okay. So I wanted to go over this. This is really kind of easy for me to do because I keep this stuff pretty simple for myself because I don't like to get too complicated. I like to get an idea of where my business is coming from. And if you get an idea of what you're trying to do for the new year, I know a lot of people that are planning and, you know, their goals for 2023, their goals every year seem to be always really like a couple pages, sometimes a book of this are my goals, this is how I'm going to do it. And I really found with a particular business coach I had for a while, I felt like the more simple version of my plan for the next year really threw itself into a place where I could just measure the most simple things I thought that I know bring me the most closest to the dollar actions. So when I put my goal together, I look at a minimum number of transactions that I want to do, and then where I think I'm going to be getting those. And my goal is, you know, some people look at that goal and may say that's really small. Some people say it's too big. You know, 3 bears. You know, this one's just right. But I really like to be realistic about where I've been for the last year and where I'm kind of headed towards, and what the trends are in my particular production. And then I lead in with how I'm going to go get all of that. So I figure out my numbers, what they're going to be, and then I just keep track of them right here. I just keep it real simple with the spreadsheet. And then I just list the ways in which I'm going to attract that business and what works for me. And I use all 12 of these all the time. This is an ongoing thing all year long. So I'm going to go through them because I think it's really important. The beer and coffee thing, I met a guy years ago named Bob Kuiper, and this works for me. This transitions my best skills into getting a beer or a coffee with my top clients, my top 40 clients, and getting referrals from them. You know, schedule a time, get together, talk about the business. And, you know, it only counts if I ask them if they have something in their portfolio that they want to really sell or trade, or if they have some investment requirements that are coming up. But that, gets me the appointment I'm looking for, because I'm not always looking for the appointment with, my suit on in a boardroom. I'm looking for the appointment that I'm at Starbucks or I'm at a pub somewhere and we're just having a casual conversation that leads into that next formal meeting that requires me to crunch some numbers. Because I found that getting there, this was half the battle. And really having just a simple conversation. So I get a lot of business doing it that way. And Bob Kuiper called it beer and coffee. So that's what I call it. I think, secondly, when these are in no particular order, by the way, in preference or importance, but also when I look at adding contacts in my CRM every day, I know that in order for me to add them in, they've got to give some serious value. They own, invest, something that gives them kind of an accreditation for being in my database. So if I'm talking to a bunch of people every day, at least 2 of them should be good enough to put into my database and get in my system for the follow-up calls and so forth per day. And that gets me to where I need to be. And I'm taking some out too as well. And then obviously the asset classes to focus on: multifamily, industrial, and office leases. Now, this is an important part of my business plan, and I'm just going to talk to you about my plan, and maybe you can, see yours in here somewhere, or you can use some of this to help you with yours. Or if you want to go deeper later, you're always welcome to call me. But we got into a lot of industrial last year. We got into a lot of multifamilies that are becoming on market here in the next year. But office leases, we started to see an increase in people moving offices. And what we found in our business plan that we were lacking was a little bit of that cash flow. So we were in between, we were too far in between closes. And so we started out basically going after some of these office leases for people that were relocating or downsizing their offices. And we found that because we have that, I have that background in negotiating those leases, I'm able to take that business on, negotiate those leases, and they close faster. And they pay once they pay once you close the deal. So we found that if we were doing a couple leases a month, there's a little bit better cash flow to capitalize my business with some of the expenses that I'm running on a monthly basis, right? From CoStar to Reonomy to Crexy to KW Commercial. I mean, it all has a certain cost, and I found that it balanced it out. And we're not where we want to be, but we're adding more leases. And we closed another lease this month, and they're sizable leases. They're 10-year leases. They pay very well. So if you haven't done a lease or you need help with leases, I'm here. I can help with that. There's a lot of good education with the AIR CRE forms. They give classes on that. And, you can talk to the broker, and if you can do leases, it's great. So that's part of what we're adding to the business plan for 23 is to get maybe 1 or 2 leases a month. And like I said, the GCI on those is pretty rich. And if you negotiate the commission agreements right, you can get paid once you have commencement, occupancy, and a signed lease with deposit. So it's a great part of our plan for 23. How many connects I'm making? Number 4, lead generation for trades and purchase requirements for all of my past and present and future clients. The connects I make per day is kind of low, but I would say it's consistent 4 days a week. And it's about asking for the business. And so if I've got 25 connects, that has to do specifically, I've been on the phone and I'm asking for something they want to sell, trade, or a requirement to acquire new property. And that counts for me, and it's every day. And I don't know what everyone else does, but I do my stuff from 2 to 5. I do all my work from 2 to 5. So I'm usually in the morning working on deals, putting out fires, but that's really important that you know where and when to get them. If you're calling between 11 and 1 in commercial, you're not really wanting to get in touch with anybody because most of these guys are at lunch or playing golf or doing something fun, or spending the money they're making investing. So we find that for 23, we're going to continue doing that. of course, the tech side, integrating, I get a lot of leads off my website, and I post on LinkedIn. I do that all myself. And I know some people say we should hire someone to do it. I've tried that, and I don't get any better results than when I do it off myself. And plus the stuff I post, the stuff that I think is pertinent to my clients and people that follow me, people I'm integrating with. People do have questions. I do get calls about, hey, can you help me with this? Or what do you know about that? I saw you post something, and I get a lot of traction, but I also get, I've grown my database in LinkedIn, for example, to almost 3,000 people. For some people, that's not a lot, but for me, for a guy who only had 500 at one time, that's quite a few. And I've gotten rid of all of the, people that I didn't want to be linked to, that were not really part of my business space. I think that's a really important part of the business planning for 23, Instagram, obviously, and then stories, promoting the brand. But the tech portion is really important. We feel we don't really even tap into that well enough, but we don't overdo it. I don't think we're going to get a bunch of business off of our Instagram stories. I think they're just something out there to show that we're doing business and we're good people, and gives you some sort of recognition beyond just a phone call.
Hey, Jason, I got a question.
Yeah.
Since you're doing you said something about taking off people that don't really fit your criteria as a client on your social media, right? Is that what you said?
Yep.
I mean, how do you really cut through all this noise that we get? Because if you know, throughout the day, we get so much noise that is, people are doing this, people are doing that. How do you focus on what you want? Do you just think about, okay, this person, this connection is going to help me? How do you determine that?
Well, I do the best I can, so I'm never too hard on myself.
Mhm.
But I think one of the things that I've done is I just kind of search through. I've got an app that I use that helps me kind of climb through the different titles that people have on LinkedIn, people that I think that I could speak to, and then other people that maybe, have opportunities for me, people that are going to be trading. So you have anywhere from property managers to CEOs, presidents of companies, places where I felt like I'm best of value for the content that I produce. And then, when I first started LinkedIn suggested that I get in touch with all of these residential agents. And I just felt like being in touch with other agents was okay to a certain extent, but 90% of all my contacts at one point were like all in the industry. And that's okay. It wasn't like I disliked everybody, but it was just the point where I don't think I was reaching the right people. So I just kind of went through and got rid of a lot of the agents that I, didn't need to be talking to all the time. And then went after people and started making phone calls. A lot of times I read a lot. And so I read a lot of everything from data to articles like Globe Street and BizNow and things like that. And I'll read an article, and there'll be a guy that puts out an article that he interviewed somebody that was in the hospitality business. And so I just called on them and out of the article, said, I read your article, and I know you guys are acquiring new hotels and blah, 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 blah. And we started a conversation, and, we've presented several assets to him. They haven't purchased yet, but those are the kind of people that I get involved with. And then I find out who they're connected to, and I get in touch with those people. And it's organic. It takes a little longer, but it's effective. And I get a lot of Q&A, and I've gotten a couple deals out of it. So, if you did it on a large scale, I just think sometimes when you go too big, I think you can miss stuff. And then if people think that you're just out there branding yourself and not paying attention to their inquiries, questions like, hey, where did you get that? Or do you have a couple of different opportunities you could send over to me today? You don't want to miss those. So you want to be involved. I believe that, but maybe I'm wrong, but that's how I do it.
Okay, thank you.
Any other questions as of to now? No? All right. How many people are on this call? Just 4 of us?
The 6, I guess.
6. 6. Sweet.
including
All right.
you, Kim, and I.
Yeah. Okay. And then I send out my 100 top clients. I send out an email once a month. And it has a couple opportunities. I usually get feedback, and that's always, I mean, we think it's important. I do follow up with notes, personal notes to people. I like that. That's part of who I am. Some people don't like that. I enjoy it because I think it gets to people in a different way. They're like, dude, I haven't received a handwritten note in 5 years. Thanks for sending it out there. Let's get together for lunch, that kind of thing. And then obviously follow up for us next year is huge because we've been in the trenches since the pandemic, cultivating new clients. So with our connects per day and what we're trying to accomplish, it's a real big theme because people, I think, don't follow up enough and they fall through the cracks. So follow up for next year is huge for us. And that kind of goes into our activity model for the number of connects and then the number of, asks we make for business, huge. And then I have been taking some CoStar classes with the rep to just get better at using CoStar because there's so much stuff that you could use. You have to go in there and ask, what's the best practice for this particular search or, the reports that they have. And, if you're an expert in CoStar, then you're better than me. I use it to my best of my ability. And like I said, when we began today, today's all about incompetence. I'm only good until I'm incompetent and I can't go any further. I need help. I need a coach. I need help from we pay enough for these services. We should leverage our dollars and time with them to teach us the best way to do it. And then, the last three here, what the whole measurement thing, if you're not measuring your productivity, you don't know, we don't know what's going on. I mean, you just have no idea. And it doesn't take much, but I'm trying to get at least 5 appointments per week and then 5 proposals a month. And for some people, I don't know what that falls, too much, too little. Oh my God, who knows? Just right. But the appointments that I have, which is killer, we're exceeding those goals now because the Zoom calls allow us to have appointments where we would normally have to travel an hour and a half to see someone. So we're exceeding those right now. There's a lot of competition we find in certain marketplaces and in others, there isn't. And so 5, 1 appointment per day that we've booked already works out to be, I think we're hitting probably an average of 2 a day, but sometimes they all happen on one day because those are all Zoom calls and presentations and proposals. But I think that the commercial client that's looking to expand their business, looking to acquire, with trade dollars, I think that there's a lot of that going on right now. There's a lot of new paradigm being created between, we're finding it industrial clients of ours are expanding. We're finding that some of these places that were for lease and industrial are now for sale. So we're making some proposals to those for clients that are right next door and say, I want to take that 50,000 square feet. I need it. And we're getting some traction there. So those proposals are important. And I think it's a good way to track. So if you're not doing that per week, how many are you doing per week? And what are you measuring? Because we'll take any and all business and we'll sort it out later. So we want to have it come in and, we're generalists. I'm a generalist here. Some people are specifically multifamily or one or the other. I got to be able to pay the bills and do what I do. So as I transition into a specific asset class, I'm still going to take on the things that I need. And I just can't turn down gross commission dollars when I know I can do the business. And I'm fortunate enough to have enough business and people in different spaces to share in that sometimes. And I know others can't, but I'm just not one specific asset class. I do stay out of business opportunities. I have a team member that does business opportunities, and that's really been a relief because, counting spoons and candles for a business opportunity is not really my idea of a fun time. So this is where my passion lies in business opportunities. If it comes with a sale of the real estate, I'll bring in the team member and he'll do the business portion of it and he'll get it done right. And then of course I do this podcast and I'm going to be expanding to another one to do a little bit more in-depth interviews with people in the industry across the United States in different markets. And I think that's going to be real exciting. We've already got January, February, and March booked for next year. And we'll start sending out the branding for the podcast. It'll be an extension of All the Hype. It'll, it's Hype, What's All the Hype version 2 and 2.0. It's going to be sweet. But it's going to be outside the state of California at first, and then we'll bring it in with people that are local here in SoCal and all of California and the different industries. We're looking forward to that. And then I don't know how many of you use Reonomy, but I use Reonomy in a geo call fashion. I like to use it live. So I bring it up and I just click. So if I've sold a particular asset class in that area, I start clicking on the neighbors and I just pull up their portfolios and start dialing away. And so in kind of in a circle. So I get on there to make calls, especially when I've kind of exhausted my database or I'm tired of talking to some of the same people. I'll get on there, and even if you sold one somewhere, let's say, and I got a particular sale that happened there, then I click on the ones around it and start asking them if they're familiar with that sale, or they understand what sold, and what's the last time they sold, and were they looking anything in their portfolio, including this particular one next door. But it's so easy because you're just clicking on the asset right on the screen, and you can save the information if you'd like. Reonomy has a little bit of interaction. You're able to use that a little bit before you transfer anybody into your database, because I'm not just transferring anybody into my database. I got to kind of make it because if they haven't traded anything in 20 years, maybe it's time, but that's not always the case. So I want to make sure that I get them kind of vetted before I put them in there for a 30-day follow-up or whatever the follow-up may require. But these are the 12 that I use. I've changed a couple different up for 23, but I'm using those all the time. And I measure these things daily so that I know what's going on. And I think in the commercial business, one of the things that's the most difficult part of this business, it is definitely not a sprint, it is a marathon. And it is the consistency and discipline of this work that allows you to have more and more success as time goes on. End of story. I think residential real estate has a kind of a quick fix, economy based, what's going on, transactional feel to it. And this is all relationships. And so all of my lead attraction activities that I put in my goals for 23 are really designed that marathon race. And yeah, we hit our big ones every once in a while, and we've added office leases to our plan so that we can feel that we're comfortable in increasing some of that cash flow. I mean, not kidding. We did a 10-year over at Douglas and Emmett on Olympic this year, and that commission was $55,000. And it's a renewal. So I mean, they pay well, and if you can get them done, in between your big, 12-month escrows for some of these larger deals that we're doing, it helps kind of ease the pain and the insanity of the commercial business. I mean, if you're not part of that insanity cycle and you don't ride a roller coaster, then you're doing better production than I got going on. But most of our stuff lasts a long time. We've been in escrow in a place downtown Los Angeles for a year and a half. We'll close in October. Can't wait around for too many of those, right? You got to pay the bills. So that's kind of how I do it. I mean, because it's not too much to keep track of, but it's enough to where you feel like where your head is important. So that's kind of my level. This is where my knowledge stops and my incompetency begins. So I've got a new coach this year, a new coach, new mentor. and going to be increasing my knowledge and getting better at this. Because I think you go on. I mean, it's like, I always wondered why Tiger Woods always was getting new coaches, right? Like, geez, dude, like, what are you doing? And then he would get a new coach, and then you get a new caddy, and he was just taking it to the next level. He was, his body was changing, so he needed a different coach. And I think, I had a coach for 2 years, and I think I exceeded his ability to help me. So I've got a new one, and just kind of go that route. I'm never ashamed to say I got a coach, because I think it's really important we all have one, and someone to bounce ideas off of, or tell you that this is a really, really bad idea. Stop doing it right now. So that's part of 23's plan. I don't know if you've ever seen like my professional development. I'm taking my broker's license it's in November, so that'll happen. I'm also getting, this has come out part of my 23 limited securities license. If you guys have ever thought about getting a limited securities license, you can get, I think it's a series 66, can't remember, where you can get paid for some of the DST transactions. I know there's a move afoot about, you can get paid anyway without the license. But if you have a limited securities license, you don't have to just sell one particular product group of DST. Something you might want to think about. I'm doing that this year. Also recruiting for my team here in Long Beach, big part of it. And leveraging the CoStar reps, that's part of it. The David Halpern was my old coach, so that's going to change. Starting the 3-unit process, regional ambassador duties. I'm going to be doing more regional calls with leadership. So bringing our region up to speed on what's going on with KW commercial abroad and what's happening there. And then of course, the Massimo trainings, the new training for me. So that's really basically what I'm doing for 23. And I try to keep it simple. I think you all should too. Because if your business plan looks like something you're turning in for your thesis in your graduate work, I think you're trying too hard at writing the plan and you're not working hard enough. I just keep it simple. So that's kind of the basics for me. Does anybody have any questions on their plan for 23 or how I go about measuring this stuff? Or
I have a question, Jason.
Yeah.
Now I can understand your total goals and database and phone marketing. The 1031 exchanges, I mean, how do you get the leads from that? Is that something that is within your book of business, or is it something that you actually go after? I mean, how does that work with compared to the others?
Well, that all comes from escrow offices and the 1031 exchange accommodators.
I see. Okay. So that's where it's come from. Okay.
Yep. I just call them and find out where they're at, because you know how it works. You call into an escrow office and all of a sudden, they don't have anything to buy. Something fell out. Yeah, you could help them. I'll have them give you a call.
I see.
Okay. That kind of thing. Yep.
Can you scroll up a little bit more? I think I had another question. You mentioned about Reonomy. How is that different from CoStar, or is it data the same data, or is it different? Because
I cross-reference both. A great question. I cross-reference both because sometimes the information is different. Reonomy is more an algorithm-based application software, where CoStar is still manual. They do everything manual. They follow up with you when you sell something, and Reonomy is a little bit more accurate, but they're still, I use both because they're both semi-inaccurate. I mean, the phone numbers don't always work. What's really cool about Reonomy, which I like, is that they have an ability to look at the portfolio of the owner. So if I click on your name, all of a sudden this portfolio jumps out at me.
I see.
And that has been really advantageous, because all of a sudden the questions I'm asking you could be a little bit different. They shouldn't be, by the way, you should always assume somebody owns more than they do, but you know, all of a sudden I'm asking questions and then I know that you've got asset classes all over the United States.
Okay.
You know, and sometimes, you know, we all know that the person that they have as a contact person may only be the person that signed on the statement of information as the manager, and they're really not involved. And, you know, there's things you have to, you know, obviously go a little deeper with, but it's always a good conversation and, you know, to find it. But I cross-reference both of those all the time. Format's a little bit different. You get right to kind of the basic information on reonomy, tax, unit count, zoning, things like that, real quick. And then, of course, you know, you have the ability to click on the property next to it, which is just, and then you're like, hey, wait a minute, they own that too. Oh, wait, they own the entire block. You know, and that's the advantage of that. And it's been worth the dollars that we pay, because, you know, at some point it's got to be cost effective. And those two seem to be pretty cost effective by cross-referencing both of those.
Got it. Thank you.
Mm-hmm. So the other thing that's really important too is I was in a coaching class last week, and I think it's important to share. I think that one of the things that came across was that the level of frustration that this business brings is, I mean, by far some of the most stressful paradigms I've ever been into, whether it's negotiations or chasing your commission down, or, you know, whatever it may be with unscrupulous brokers and things like that. But the frustration level is only to do two things. And most people in this business that start doing commercial business start it, and in the first year they're done. They never get past the first year. The second thing that frustration is supposed to bring is this re-up of your, you know, commitment to doing the business. Because if you can make it a year in this business, you should be able to move on and move through it. And as long as you're moving forward and trying to learn more and, you know, sell more types of commercial real estate. And that frustration, it does two things: makes you quit, or it reinvigorates you to go to the next level, and look for answers where you never had questions before. And I think that for me, that frustration level comes about every September, with, you know, what I've done or what I have done, as I had stated in the beginning of this podcast today. But it's really important that you understand where you're at in that frustration level, so that you can ask the questions to the right people to get beyond it, so you can start making more money for next year. Because I think we don't talk about it a lot in commercial, but it is part of the process. You know, you can lose millions and millions in sales in, you know, overnight. And that doesn't always happen to people that can, you know, on a regular basis anywhere else. I mean, obviously if you're in finance, I guess so, but I think it's important to talk about it because we all get stuck. And I will tell you is that if you have not taken advantage of Keller Williams in their RERM support, risk management, I just had the opportunity to do that in a lease deal that we did. And what a great result we got out of the support from the broker, the attorney, and RERM and the risk management. It was fantastic. We gave them all the information that we had, filled out the form, got in touch with the attorney, and she wrote one demand letter, and boom, they're writing the check. And so it was really important that you guys take advantage of that when you can, because it's not offered to everybody outside of Keller Williams. So definitely something to, you know, you're looking for, check the box and why you're here. That's one big box right there.
Mhm.
For sure. Never had to use them before, and didn't really know what I was doing, but it worked out really well. But I mean, basically that's all I've got for today. I thought it was really important because it came across my desk as a means of, hey, you got to start planning for 2023. I know that people have different ways in which they plan for their their business. And, if anyone's got something they could add to what they do, I'd like to hear that too, because I'm always trying to better my game.
Hey, Jason, this is Ray. Can you hear me okay?
Yeah.
All right, cool. Good seeing you. Good seeing
Yeah,
everybody on
man.
the call, including my friend David over there.
Hey, Ray.
Jason, as you know, I'm a part-time commercial KW agent. And my question is, earlier in the call, you had said that residential is more transactional versus commercial is more relationship based. Can you touch a little bit on that? Because I would think also residential is about relationship building as well, but just to distinguish between both.
Yeah, absolutely. So in commercial, I always have used the example, the metaphor of being a freeway. And investors are on the freeway, and they own and they sell, and they do it all the time. And they do it for a lot of different reasons than just because they like something or they need to move. They have different motivations, right? They're money investors. So it's always going on all the time.
Mhm.
So those relationships that you build with those people over time mean a direct correlation to the commission you're going to get over the next 5 years, if they're the right people, okay? And they're going to continue to be that way if you follow up with them. Whereas the residential agent develops relationships with people for referrals and so forth, but most of those residential purchases are one-off. You're going to buy my home, and maybe in a couple of years, maybe I'll upgrade to the next. But I believe that it's not always moving. I mean, look at the standstill that happened with the money change. Money change for residential and sales dropped out of the sky. Credit markets tightened in commercial, and there was a memo put out by the Fed that said, listen, we're going to do everything we can to accommodate all this debt. We're not going to foreclose. We want you guys to figure out a way to standardize the way you accommodate this debt, but we do not want to foreclose on all this commercial debt. We want people to keep buying, investing, and getting their returns. So the relationships that we build with these investors over time, they're constantly selling, they're constantly acquiring, constantly trading all the time. And you can choose to get on this freeway or not. And the relationships that you build with each individual investor or institution is really, really important. It will pay off over time and time again. If you built a relationship with someone in residential, they could be your biggest fan, but they only bought one house from you. And how many referrals are you going to pump out of somebody before they completely hate you, right? Because you're my favorite fan, and I want deals and deals and deals from you, and they just don't know anybody. But you can't expect residential clients always to know people.
Correct.
But you definitely know that investors are going to buy from you or sell some of their stuff with you.
Especially when they read the online or Yelp reviews on the agents, right? Residential.
Yeah, right. So I think the relationship building pays off in bigger dollars and more often with the same people over those relationships.
Makes sense. Thanks, Jason.
Yeah.
Good insight.
Anybody else have any questions or think I'm just batshit crazy with what I'm talking about?
It makes all sense. It makes sense. No.
Okay.
Yeah, one of the things that you said is very important, that I always think complicated. I make everything complicated. And I'm trying to make everything simple. And you just mentioned that, making it simple makes it a lot easier. So that's one thing that I'm gonna really try to do, make things simple. Like even big building a database, I think so complicated, but like you said, that's why I asked you, what information do you want on a database? Because there's a lot of information there, but not all the information is really relevant to what you want to do. Is that correct? It's just you just need some basic information of the properties and the owners. That's all you need.
Correct. I mean, over time, when you start adding, like I use Client Look, and you start adding assets in there and what have you, But if I'm spending too much time putting asset information into my database versus just the phone number, some notes on who they are and what they buy, over time, I'll get to know their portfolio, and that'll be important. But right now, it's just about transactions and relationships, and in fact, not in that order. Relationships and then transactions, and getting to know them and talking to them. And you should be able to take your database in commercial, and I should just be able to call up. Hey, David, it's Jason DuFault. Hey, how you doing? Good. He said, you got anything for me to take a look at today? They should know who you are and what you do. You shouldn't have to tell them who you work for or what you do. And if that is good enough, and you already know who they are, you know that they buy stuff that's right next door to where they already own.
Right.
Right. And you have a conversation because the building next door is going to go on the market, and I can get you a deal, and let's talk about it right now. That's the most important part. You can catch up with the data, their portfolio, the numbers, after you get them to bite on the fact that they'd like to take a look.
Got it. Thank you.
Yeah. There was the other thing too, I think that's really important. This is one that's on me for sure. The last year and a half, whatever, I have not put my health and working out and what have you in good order. And that's one thing that's on my list. I think we should all get out there and do a little exercise, get a good sweat in, and be good to ourselves. Because if I feel good and less stressed because I can come in the office and kick a couple deals down the road, but I haven't been out there to get my workout in, or I'm gonna watch when I'm eating or drinking too much. Just be careful. It's really stressful, and I definitely working on that for 2023.
Yeah, like they say, if you don't feel well, you don't do well.
Right.
So if you wake up in the morning and you're just not really feeling well, you're not gonna have a good day. You're just gonna try to just get by.
Yeah, no, absolutely. And here's the thing: the average age of a commercial agent or brokers, I want to say like 47, something like that. So you don't get a lot of young guys in this business for a long time. So the young guys are in their 20s. They probably don't need to work out, but I'm 51, so I've got to watch it and get it in order, and get that worked out. So I just would put it out there to you. Make sure you treat yourself nice and go for a walk or do something.
Will do.
That's all I got today, boys and girls, ladies and gentlemen.
Thank you, Jason. Really appreciate it. Very
Thank
helpful.
you, Jason.
Thank you.
Thank you